everyone. Thank you so much for joining us today. Whether you're in here or online on YouTube at this time or watching it a little bit later too, thank you so much for joining us. And I hope everyone's enjoying their new year so far. So that brings us to the topic for today, New Year, fresh financial mindset. So every year, we all make, the New Year's resolution. And for a lot of people, it involves, getting out of debt. It involves saving a little bit more. It involves investing a little bit more too. So in this presentation, we'll talk a little bit more about budgeting, savings, managing debt and credit, loans, retirement, and financial planning, managing your money and watching out for scams. So again, this is my contact information. So if you can't write this down now, you can always take a look at our website at mayocreditunion.org. And my contact information will be on the financial education tab of it, okay? So you can call me or email me. Again, please reach out to me at any time. And the first things on the list, it's going to be, so some common concerns are inflation, debt, paying for housing, lack of emergency funds, and discretionary spending. Some other common money-related activities that trigger feelings of anxiety and being overwhelmed. And insecurity are looking at bank statements or credit card statements. About 49% of the people that were polled said that they have anxiety looking at their bank statements or credit card statements, especially after the holidays, right? That first credit card statement, the bank statements after the spending, the holiday spending is a little bit tough. So it's really important that if you find yourself having this kind of anxiety or insecurity, or you feel overwhelmed when you need to review anything financial, maybe, it's a good idea to chat with someone about it. If you want to meet with me, you're more than welcome to. We can go over some of your statements together. Or if, even better, you can get a budget buddy. You can talk to your spouse or significant other about some of the anxiety that you're having about finances. About 41% of people that were polled expressed that they have anxiety about paying their bills, which is pretty common, especially with the state of the economy and the inflation that keeps going up and up every single year. So it's not a surprise that 41% of people polled said that they are, having a lot of anxiety around paying their bills. Also making purchases, 34% express that kind of anxiety, simply because if they need to make a new purchase of a vehicle, if they need to purchase, something big that they absolutely need for the house, something like an air conditioner or a heating unit or something. What if they can't afford it? If their credit is not good enough, they can't afford to get a loan to get those items that they and their family need. Having to discuss money, that's a huge reason why people come to my office too. In this poll, about 32% of people have anxiety about discussing money. You have to think about your own relationship with money, how you grew up with money, what your relationship was like around personal finance. Did your parents fight a lot when you were kids about finances? Did you and your spouse fight a lot about finances? Do you go, on a spending spree when you need to relieve some stress? How did your significant other or how did your spouse, what was their relationship like growing up with money? Did they not have any? Are they extreme savers because they come from a scarcity mindset or a scarcity background? So just keep in mind that you're not alone if you find it very, very difficult to discuss finances, even with your spouse or even with, close family and friends. Getting paid, believe it or not, people still have anxiety. About 21% of people that polled are anxious when they get paid. The day that they get paid, they know they have to pay certain bills. Am I going to have enough, to buy groceries after I pay all those bills? What kind of bills are due? Am I late? Am I delinquent? And then looking at their investment accounts, only 16% of people are anxious about that. Am I saving enough for my future? When do I want to retire? Am I saving too much for my future? Do I need to cut back on my contributions just so I can have extra money to pay down higher interest debt? So that is, if you find yourself in that situation, you're more than welcome to reach out to us to meet with someone. Looking at social media, for some people, it gives them a lot of anxiety to see that, with people flaunting what they got for Christmas, flaunting about their vacations, flaunting, what they got their kids for back to school. For some people, they feel like, am I doing enough for my family? Am I, is this where I want to be financially? So you start comparing yourself, when you look at social media. Just remember, it's just a small capture of the highlight of someone's life for the most part. so they feel inadequate financially when they're looking at social media. First things I always talk about with people is budgeting. It's always very good to have a budget. You have to set a budget and be very realistic with it. But also when I talk about a budgeting or budgeting tools with some of our members and with people, I want them to understand that it's not a restriction. Just look at it as a form of freedom. You know exactly where all your money is going to. You know where, you know when bills are due. You know how much is going to be allocated towards those bills. You know what some of your big bills are coming up. So it gives you the sense of freedom that you know exactly how much you have left to spend, how much you have in your fund account, how much you have left in your vacation account. So it kind of gives you that freedom. So instead of looking at budgeting as a restriction, just look at it as more financial freedom. We want you to build healthy habits, and some of that healthy habits include establishing and understanding your credit. Improving your credit, is that on your New Year's resolution for 2026? Do you know where your credit is standing at? Do you know what is on your credit report? So it's really important that we try to understand that too. Another healthy habit to form in 2026 is to make all your payments on time. For a lot of people, it's easier said than done, right? If you have to choose between paying on your American Express versus getting groceries for this month, which one are you going to choose? And unfortunately, that's a common problem for a lot of families in this economy, and especially in Olmsted County. Another healthy habits we want you to start building a savings account. Do you have enough in your emergency savings? Do you know how much you need in your emergency savings? I highly recommend at least $1,500 in your emergency savings in case something happens. That way you don't have to put that debt or that emergency on a credit card, putting you further into debt. You can just use that money out of your emergency savings account. But most importantly, do you know what is considered an emergency? Is it that purse that's on sale that's going to be expired at the end of the business day today, or you need new tires? Is that a true emergency? So it's really important that you determine, what really is a true emergency. We want you to set financial goals, of course, right? So it's really important to know, this is what I'm heading towards. This is where, I have a destination. This is how I'm going to get there. This is the check-in date as the first phase of that financial goal. This is the second check-in date for that second phase of that financial goal. Whatever financial goal you may have. It could be a short-term goal, something that takes up less than a year. You want to save up, $5,000-$6,000 this year just so you can take a trip to Europe next year. That's considered a short-term goal. Medium-term goals are usually between 2 to 3 years. Do you want to save up, a down payment on a house within 2 to 3 years? That can be your medium-term goal too. And then a long-term goal would be several years or decades ahead, right? Depending where you're at. That will look into retirement. Do you want to buy a second house in South America or in Asia or Europe somewhere? Is that a long-term goal for you when you retire? What do you want your retirement to look like? Do you want to just hang out here in Minnesota or, whatever state you're in now and go camping with the kids and grandkids during the summertime? Or do you want to travel the world a little bit more? So whatever your long-term goals are, it's really important that you set those goals, and then work your way backwards and see how much you actually need to invest, how much you actually need to save towards those goals, okay? So budgeting, it's always good to know where to start. Just know your basic numbers, right? So this is just the basic Excel spreadsheet that's available on our website for anyone to download. So where do you actually start? You want to create a list of all your monthly expenses. You want to know what kind of income is coming in. The first part of this is your income. That includes if you have, child support, if you're getting spousal maintenance, if you're getting Social Security or your kids are getting Social Security, all of your income that's coming to your household, every single dime that's coming in, you want to list that. And then you want to list your monthly expenses. These are your fixed expenses. Things are like your mortgage, your rent, your car payments, car insurance. So pretty much things that are due in the same amounts every month, same date every month. So of course we know, Rochester Public Utilities, RPU and Minnesota Energy will fluctuate a little bit depending on the season. So these are basically the fixed amount, right? And then kind of list off your variable expenses too. We know it varies from season to season, from month to month, but we still want to put a cap on those things. For a family of 4 in Olmsted County, $800 a month in groceries is sufficient. There's still funds to go eat out. There's still funds to get gas and have some fun, things like that. But again, it's really, really important that you have a savings category too. So after you pay your fixed expenses, after you pay your variable expenses, make your savings goals kind of like a bill, so that way it's mandatory for you to pay those savings account too. You can have multiple savings accounts, like here at MEFCU, My Employees Federal Credit Union, where we don't charge for any extra accounts or anything. You can have as many accounts as you want, and you can, allocate emergency savings. You can allocate like car maintenance into each of those savings accounts, so you know exactly how much you have in those in case something happens and you know to take it out of those accounts. You might want to automate your savings. If you're working at Mayo or a lot of other employers, you have the ability to split up your income and say, I want 50% to go towards my savings at MEFCU, and I want the other 50% to go towards my checking at Wells Fargo. You can do that too, so that way your savings are automated and you're removing the middleman yourself. Okay, so you are the middleman. You won't even see that money is going to be automatically transferred into your savings account. So make it as easy and as seamless as possible. And if 50% is too much, which it is for a lot of households, start with 1%. Just say 1% of my paycheck is going to go towards a separate savings account where I don't really have access to it, don't have a debit card to it. I would have to go to the actual bank itself and try to get the cash out. Just make it hard for yourself to access that money unless it's a true emergency. So there's so many other ways to kind of keep yourself off of, from touching that emergency savings too. And of course, we want you to save towards your financial goals. So that's really important that you include that as part of your monthly bills too. So we all know how to reduce expenses. Some of the examples would be, changing cell phone plans for your provider. You don't want to stay loyal to one company just because you've been with them for 15 years. That doesn't mean they're going to give you a discount for it. Around the holiday times or throughout the year, there's going to be so many specials. If you've been with T-Mobile for a long time, maybe Verizon's going to give you a better deal, even with better coverage and everything too. So it's really important that you kind of shop around a little bit. Again, not just cell phone plans, but also like car insurance too. So if you've been with your car insurance company for, 10, 15 years and you're not happy with the rates, why don't you shop around a little bit for different car insurance rates, and they'll be able to give you a quote without having to run your credit report. If you're not using a gym membership, go ahead and cancel that. It can range anywhere from like $20 or $10 at Planet Fitness all the way up to $200-300 at the Rack here in Rochester. So if you and your family are not currently using it, you can put it on hold. You can put on pause, or you can just cancel it altogether. Cut streaming services are considered different internet providers too. When streaming services first came out, when Netflix first came out, it was sold as, stop guessing on how much cable is going to be each month. Instead of paying $100 and something for cable, you can just pay $10 for Netflix and you can watch all these movies. And now streaming services are kind of getting out of hand. There's one for pretty much every channel. If you're just watching, just getting that, Peacock just to watch a certain show, and if that season is over, you're not going to watch, Peacock or that streaming service anymore, then just go ahead and cancel it until your show comes back on next season. There's some streaming services like the sports package with YouTube or Hulu, that's about $80-90 a month. So if your football season is going to be over soon here, you might as well just go ahead and cancel until next season. So you might want to take a look at all your streaming services, all of your subscriptions too. So you may have subscriptions to like makeup, you may have subscriptions to meat company. So many different subscription companies out there. The best way to do is just to review your accounts, right? To review your checking account, review your credit card account, just to see where all these money are going out to. Are there any subscriptions that you're not noticing? When was the last time you used any of the stuff that you received from those subscription services? Is it time for you to cancel it, and see if you can get a refund for it? You can move your money out of your checking or savings account if you're with an institution that charges you a monthly fee just to keep your money there. As mentioned before, here at MEFCU, you can have as many savings accounts you want, as many checking accounts you want without any service fee. We just require like a $5 membership fee here just to keep in your savings account. But there are institutions like Wells Fargo, for example, if you don't have a direct deposit of, let's say, at least $500 a month going in there, then they charge you a $15 monthly fee. If you find yourself in one of these institutions, maybe it's best to just move it to another entity that doesn't charge you for all of that. Okay. If you've been working on your credit and your credit is in a better standing than it was when you first got your mortgage, your car loan, or whatever loans you may have, maybe it's time to talk to a loan officer and see if you can lower your interest rate on your loans. See if you need to refinance any of that. See if you need to consolidate any of your debt together, and then just get one low interest rate on it. For example, you can talk to a loan officer about refinancing your vehicle loan. Your student loans you can refinance with us too, or other companies. Or if you find yourself that your interest rates are really high on all your credit cards and you just need to get a large loan to pay off all your debt, with a low interest rate, you can talk to a loan officer here about that too. So just keep in mind that it requires your credit to be a little bit better than what it was when you first initially got the loan. Okay, so if you find yourself in this situation, I still think it's a good idea to talk to someone about it, whether you talk to me or a loan officer here. They'll walk you through the process and tell you exactly what you need to do. The point of it is, when you do a budgeting, we want it to budget towards your current lifestyle now, and keeping your future lifestyle, your goal lifestyle in mind also. So we want you to tailor your goals according to your lifestyle and what you want to achieve in 2, 3 years, or 5 years, or 10 years. I want you to stay on track with budgeting, of course. So what's the point of having a budget if you can't stay on track with it? So we wanted to make it as easy a transition as possible. We want you to have a plan. You can schedule a meeting with yourself or with a budget buddy or with a financial counselor to discuss your plans and you take actions. If your plan is to save $5,000 by June, are you on track to reach that goal by June, or do you need to adjust other things in your spending too? The goal is to get started as soon as possible, right? So the sooner you get started talking to someone or set goals for yourself, setting a budget and reaching those financial goals for yourself, you feel better about yourself too. I can achieve these financial goals. These are hard to do, and I'm achieving them, whether it's on your own or with someone else, kind of helping you take accountability too. I want you to take accountability and meet with someone who can hold you accountable for your own actions, right? If you are saying that, I'm not going to spend, $200-$300 a month on drinks, on going out anymore, maybe it's harder for you to realize that you are doing it because you were doing it out of habit before. But when you're meeting with a budget buddy or someone, with our institution to kind of hold you accountable and say, what you're spending is a little bit more than what we had planned for, so maybe we just need to kind of tone down for this next paycheck so we can make sure that you reach your financial goal for the next 6 months. So we're not here to hold your hand per se. We're not here to drill you. We're not here to shame you in any way at all. We just kind of want you to bring stuff to your attention and say, hey, you know what, we talked about these goals, and with the way things are going, I don't think we'll meet our due date with the way your spending is and where your financial goals are at. So it's just one of those things where we just kind of chit-chat with you about it, right? It's not scary to come see us or anything. Savings, it's real important to have emergency savings, right? It's so important to avoid going to debt. We want to set goals and automate your savings from your paycheck, if you can. That's the easiest way. And when you have an emergency savings, we want you to save at least 6 to 9 months of living expenses. That figure might be really, really intimidating. For some people, it might be $30,000, $40,000, for 6 to 9 months of living expenses. But again, you can start out with just $1,500. Just keep that in your emergency savings account. And then, slowly every single paycheck, just start building it. Just continue to build it. And then once you hit your 6 months living expenses, or it's 9 months, whatever you're comfortable with, then you can move that money towards a different financial goal too. Short-term savings, determine an amount and set your goals, right? We want to have a due date on it. When is the due date for the savings account, or, for your savings goal? Is it for a car down payment, moving expenses? Where do you see yourself in a year or two? Medium-term goals, determine the amount and set goals for 2 to 5 years. And long-term goals, determine the amount and set the goals for whether it's going to be like a house down payment or investment in retirement. Ideas to accumulate savings, set goals, of course. That's the first thing to do. You want to know your budget and you want to set your goals, right? And you want to automate your savings. Make, if eating out is something you want to cut out this year because it's going to save you a lot of money, you might want to meal plan a lot. You want to dine out a lot less. So There's so many good apps out there that will help you meal prep on, with according to your budget. And it's really important that if you are trying to dine out less, then perhaps, you don't want to go from dining out 30 times a month to completely zero. That would be very difficult for someone to do. But you can gradually cut back, just eating out 5 times less per week or something. So and cook a little bit more throughout the week, just so you know that there's food at home. You don't have to go out to eat to spend extra money to dine out. You can remove your payment information from websites like Amazon or Target. Those one-click buys are very dangerous for some people. I like to use an example when I was on maternity leave and I had a baby stuck on my chest sleeping, and all I was doing was just shopping on Amazon, and that one-click buy was very easy. And so once I removed my card information and kept my card in like my car or something, so it's kind of me saying, if I just need that extra second or extra 5 minutes to think about, do I really need to get another swing for my son or another toy for my son or something? Because it forces me to get up and go get the physical card itself to enter it. So if you find yourself, overspending a little bit extra without really putting too much thought into it, perhaps just remove those card information off of those websites. Another thing I like to suggest people to do is to go ahead and unsubscribe yourself to a lot of different emails, right? Like Sephora, that costs a lot of money too, like makeup and stuff, makeup and clothes, things like that. Unsubscribe yourself to those emails so that way you won't be tempted when those sales, advertisements are coming in through your email. So that's another way too. And sell items that you no longer need. These are like clothing or baby gear, household items you no longer need. So just kind of clear things out, right? Spring's coming up here in a couple months. You can do an early spring cleaning, make a list of things you want to get rid of and sell or donate. If time permits, or if you're able to do it, then get another gig or a part-time job if you're able to do that. We live in a gig economy right now, so it's really easy to pick up, be a DoorDasher, to be an Uber driver or a Lyft driver. So if you find yourself that you need to make some extra money to pay off some debt, then it's really important to go ahead and just get another gig or work a part-time job or work extra at the current job you're at now. Another way, so many different ways to save that we have available here at MEFQ. We have high yield savings account or money market account. With credit unions, it's called money market account. With other regular banks like Wells Fargo, they're called high yield savings account. You can put your money in high yield savings account or money market account, so that way you get more of return back on the money that's sitting in your savings. You can put in certificates. We have so many different certificates, teen and youth certificates, regular CDs. And just let those mature, and they just keep rolling into the next certificate too. Just keep rolling it on over, so that way you don't have to touch the money. Educational savings, so 529 plan. Did you already start that for your kids? Is this something that you need to meet with someone to start here at the credit union? We'll be more than happy to sit you down with a member service representative so they can walk you through what an educational savings account, otherwise known as a 529 plan. And see how much you need to put towards what are some of your goals for your kids, and some of their educational needs and stuff. You can talk to someone about opening a traditional or Roth IRA here too. So many different ways to save, pre-tax savings and pensions. So a lot of different ways to save outside of your 401k or your 403b also. Managing debt. So some good debt versus bad debt. So mortgage is considered a good debt because in the economy we're in now, it's considered good because you're getting a lot of equity from your house, right? Your mortgage. Vehicle loans, if the interest is really high, if the interest is really high, it might be considered, a bad loan, or if it's not an investment vehicle, then it might be considered a bad loan too. Investments, you don't want to get, take a loan out to invest in the market or anything, but education is considered a good loan, right? You're always getting something good out of it, right? If you're choosing the right degree, you go into the right field, and that field gives you the ability to pay back your student loans. Credit cards, depends. If you have a higher interest credit card, is considered a bad debt, right? So if you have, zero interest on your credit card, you can always use that towards, put your life spending, spend your day-to-day life stuff on your 0% interest rate credit cards and just pay it off each month. If that's the situation that you're in, then it's considered good debt. Certain businesses are considered bad debt because not all businesses will succeed, right? So if it's not a good sound investment, then it's considered a bad debt. Store credits is always kind of a bad idea. Their interest rates are always a little bit higher, pretty much 29, 30%. There are certain store credits that will allow you to pay 0% interest rate for the first year. And if you don't pay off the entire balance, then it accumulates and then it goes up to like 29% for the past year that you haven't been paying the interest rate or until the entire balance is paid off. And payday lenders are always a bad idea. So if you find yourself dealing with payday lending or buy now, pay later loans, and you can't get yourself out of that vicious cycle, then you might want to meet with someone to help you get out of that situation. So, of course, always take a look at your annualcreditreport.com. Know exactly what's on your credit report. So in order for you to manage your debt, you want to know where you start, right? So know what's on your credit report to make sure everything is accurate. Find out how much debt you have and determine which debt repayment plan is best for you. Do you want to do the envelope system, the debt snowball, or the debt avalanche repayment system? And of course, the next step will be to create a budget. We want, and then, see if you can include debt repayment in that budget. If you find that you don't have enough income at the end of the month to pay extra on those debt, then perhaps it's time to sell some things, to move some things around, or to get a second job, or to try to pay that off. And then if you've done all that and you need to talk with someone, then consider whether you need to talk to a financial wellness counselor, consumer credit counseling, or debt management. So before you talk to anyone with debt management, let's come in and talk to us first, because we want to make sure that it's a legitimate company. A lot of companies out there that offer debt management are not legitimate companies, so it's important that you're not going to be scammed out of your hard-earned money. Okay. When to ask for help when you know that you're falling behind, you're getting anxiety, you can't really sleep, you're waking up anxious about thinking about your financial situation. Come and talk to someone about that. Your credit profile is very specific to you, so know exactly what your credit score is calculated. Make very thoughtful and deliberate choices and monitor your credit report at least once a year. If you go to annualcreditreport.com, it's a free service. It will not give you a credit score, but it will give you access to all 3 credit bureaus. So the 3 major credit bureaus: Equifax, TransUnion, and Experian. So it's really important that you review all 3 and just make sure that everything on your credit report is accurate. Okay. So 35% of your credit score is made of your payment history, right? So 30% is amounts owed, 10% is new credit, 15% is length of credit history, and 10% is credit mix. So your credit for the payment history, remember this makes up 35%. So you want to pay your bills on time, and if you miss a payment, get current and stay current for as long as possible. And if you can't pay your bills on time, we want you to contact your creditors. Let them know that, hey, I'm having a financial hardship this month. What are some of my options as far as repayments without it affecting my credit? It's important that you call in advance versus calling once you're delinquent. So just let them know what's going on. Amounts owed, credit utilization is best kept under 30%. So if you have a $10,000 credit line, it's best that, for the best credit score possible, you might want to stay under 30% utilization, meaning you don't go over the $3,000 mark. So it's really important that you try to keep your credit utilization as low as possible, so that way it shows that you have the discipline to not, spend all of your available credit. It shows your creditor that you have the ability to pay off your entire debt back. Okay, I help determine how well you can manage your credit. So length of credit history, so the average age of the oldest and newest accounts together, it gives you the average age of your credit history. Don't apply for unnecessary credit, or use caution if you are opening up a new credit line to transfer balances. So just remember that when you're opening a new credit, that you're getting hit, your credit score is getting hit by that hard inquiry, and so it drops your points. It dropped your credit score down by a few points, and then if you're opening a new line altogether, it's going to shorten the lifetime of your credit history, which lowers your credit score as well. So with new credits, you want to limit new inquiries, apply for and open new credit only as needed, have credit cards but manage them responsibly, of course. And credit mix, it shows your ability to manage different types of credit, revolving and installments accounts. So it shows creditor that you have experience in all of those too, and that you can pay them back. It can be helpful. Credit cards can be a helpful financial tools when used responsibly. It helps you build your credit score. That's the fastest way to build your credit score. It's really easy to manage online. A lot of credit card companies give you, fraud alert, give you access to all the statements online. So it's really easy to access online. You can earn rewards with certain cards. So you can have a travel rewards. You can have earn cash back with gas or with groceries and stuff. So it's really tempting to get all these new offers on all these credit cards. Your interest rates vary. Often starts out with very low introductory rates, and then it goes up. And so it's just very careful that you read the fine print and see when does it actually go up. It can create unnecessary debt when not paid off in full if you don't create a payment plan for bigger expenses. So it's just, spending your credit cards and not have a plan on how you're going to pay it all back. It may be just $1,000 credit line, but the interest rate is at, 29 or 30%. So if you kind of let it go for a couple months, it's going to keep growing. It just keeps growing and growing. So it's really important that you make plans to pay it back as quickly as possible. So types of loans, we have student loans, personal loans, vehicle loans, mortgage, and home equity loans here with Mayo Employee Federal Credit Union. So once your credit, if you're trying to, for example, pay off a bunch of high interest credit cards or high interest loans, perhaps it's a good idea, again, to talk to our loan officers and see what kind of loans we have available for you to get you out of that situation. But if you're in the market for student loans, private student loans, you can talk to us too and see what we can offer you and your kids and your family to see how we can help you further your education. Personal loans, we have that available too. Vehicle loans, mortgage, with the a really busy real estate time is coming up during when the kids get out of school during the summertime. So it's important if you think that you're going to buy a house during the summer that you start talking to a mortgage lender now. So we have that available too. Student loans, what types of loans do you have? Are you in the situation, are you one of those that have student loans at this time? Do you know what kind of student loans do you have? If you go to annualcreditreport.com, it'll tell you who your service provider is. And it's really important that you get in contact with them and know exactly what kind of loans do you have. Do you have the subsidized loans, unsubsidized loans, which are all federal loans? Or do you have private loans like, the ones that we provide here? If you work for Mayo or if you work for a nonprofit company, are your employers eligible for the Public Service Loan Forgiveness Program? Some of the qualifications that you have to work 30 hours per week. And are your loans an eligible repayment plan? So are the repayment plans you're under eligible for the PSLF forgiveness? Or is your loan even eligible for that? So if you need help with that, just let us know too. So again, federal loan consolidation, if you find yourself paying 16, 18 different loans, you might want to talk to them about consolidating. You can consolidate all your subsidized loan into one loan. You can consolidate all your unsubsidized loan to one loan too, but you cannot consolidate the unsubsidized and subsidized together. Or, if you need a private loan consolidation, if you have, 3, 4, 5 different private loans out there, do you want to go ahead and just consolidate into one private student loan so you only have one payment to make and one interest rate to deal with until it's paid off? You might want to talk to one of us about that, see what's best for you and your family. So student loans and their effects on the milestones that we have, right? So delayed milestones with, as there's so many people out there, millions of people with really high student loans, and it says that 59% of U.S. adults who took on student loan debt for their education have delayed financial milestones. So some of the financial milestones are saving for emergencies. 27% said that they are not able to save enough for emergencies because a lot of their money, a lot of their income's going towards their student loans. They're not able to save for retirement, or they're barely, doing the bare minimum when it comes to, contributing to their 403B or 401k. Paying off other debt. So 24% of students say that they're not able to pay off other debt because their student loans take up so much of their income. Or buying a house, there's a large debt there. And buying or leasing a vehicle. So it's just really important that before you take out these large student loans, or if your kids are about to take out large student loans, it's really important to talk to them. How are we going to pay this back? Have a game plan before you actually take the student loans out, okay? Other loans you may have or be considering are personal loans. It may make sense if you're paying on a higher interest debt or have big expenses coming up. Vehicle loans, you want to compare rates and length of term too. Is it better to buy used vehicles? Is it better to buy a new vehicle? Take a look at the numbers and see what they're offering and what we're offering too. So it's really important to shop around. Your mortgage and home equity loans, you can build equity in your house or work with a lender that you trust if you need to take a loan from your house to, fix up your house or to do other things that you may need. You can also use your home equity loan or home equity line of credit to pay off credit cards, high interest credit cards too. So we offer all these options and can provide more information if you guys are interested. Ways to feel financially secured. You want to face your debt and your fears face on or head on. Meet with a counselor. You can that we can help you organize your debt. You can review your credit report. Just practice opening it up and see what's actually on there. Don't be scared of what's on there. It may give you a little bit of anxiety at first, but once you familiarize yourself with it, you'll be able to, open up your credit score. Your credit report, and also your bank statements, credit card statements, and eventually you'll be able to face your fears and feel more, confident in yourself. Determine which debt to pay off first and then go from there, right? So if you need help with debt management or debt repayment, you're more than welcome to meet with us too. When it comes to retirement and financial planning, you want to pay off all your high interest debt first. So financial planning can pay off high interest debt or just any debt that you may have. College savings, your life insurances. Do you have enough in your life insurance to cover your family's lifestyle for the next few years or so? Do you have enough? Did you recently had a baby? Is your life insurance going to be enough to cover, to help your child get through college or where they're at? Do you need to revisit that with someone? Estate planning and trust, I highly recommend everyone going through that. It doesn't matter how old you are, where you're at in your financial journey. I think it's really important to have an estate planning and trust too. Long-term care. When do you start thinking about long-term care? Is it in your 30s, 40s, 60s, or 20s, 70s, 80s? If you work for Mayo, I know some of their benefits. You can chat with someone about long-term care, and they'll recommend, when you actually should start, how much you should start putting towards that. So it's really important to really think long-term that way. When you think about retirement and old age, it's really important to think about the estate planning and trust, the life insurance, the long-term care. It's not fun, it's not sexy, but it's necessary, right? So, and financial planning, identify retirement goals and desired lifestyle, contribute to your employer-sponsored plans. Take a look at different, Roth options or IRA options. You want to go the Roth route or traditional route. What are the difference between the two? Understand some of your government benefits, what's going to be available for us when we get, when I retire in like 20 something years, Social Security, is it going to be available for us? And by that time, are they going to require me to still work until I'm 70 or 75 or, but no matter where you're on your journey, try to understand the benefits that the government have available for you. But it's never too early to start saving for retirement. So it's really important that you start as early as possible. Just a basic graph, just to show you, if you're trying to reach $1 million by age 65, if you had started when you were 15, you would only need to invest $60 a month from the age of 15 to 65 for you to hit $1 million. For the total investment of $36,000. But if you wait till you're 55, it looks like you have to invest $4,800 each month, right? In the 10 years, for a total investment of $582,000. That means that will get you to $1 million in by the time you're 65. So the sooner you start, the better. But I know that I wasn't savings or investing at 15. So wherever you're at now, it's really important that you start. What we have available to help you manage your money, keep tabs of your money 24/7 here at MEFCU. We, of course, have online banking, mobile deposit, bill pay, digital wallets, Zelle person-to-person transfer, internal and external transfers, e-statements, and open accounts and apply for loans online, and customized alerts to monitor your accounts with us here. Last thing we'll talk about is scams. It's really, really important that you understand that it doesn't matter how old you are. It doesn't matter how well you know technology. It doesn't matter how versed you are with, internet terms, things like that. Anyone and everyone can be victims of scam. So if you have access to a phone, if you have a name, if you have a social security number, you can be a victim of a scam. So that's why it's really, really important that you review your credit report. Make sure everything on there is accurate. But also, in 2023, the FTC reported $12.5 billion lost to scam alone. In 2024, consumers report losing more money to bank transfers and cryptocurrency than any other methods combined. So the common scams, especially coming with the holiday season, there's always a surge of scams during the holiday season, but also with income tax season coming up here, there's going to be another surge of scams, right? Phishing scams, gift card scams, person-to-person scams. It could arrive to be a text, email, phone, websites, or other methods too. So kind of give you a snapshot of what it looks like. So these are some of the common scams, the amounts, the average amount of money people lose. But it's really important whether you lose $50 or $50 million, it's important to report it so that way they know what kind of resources the government needs to offer us, right? So we don't report all the scams, then they don't know what resources we actually need. So you find yourself being one of the victims, then you know you're a victim. Don't be ashamed of it. Report it. Talk to your banking institution and see what they can do to help you out, get you back on track. So, well, that concludes our presentation for the New Year, New Financial Mindset here. So if you have any other questions, whether it's online in here or later on, you can email me or contact me. So, okay. Any questions online, Christian? Good to go? All right, perfect. Well, thank you guys so much for joining us today. I hope you have a great day and enjoy the windy weather.